Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is journal entries, recording transaction. And guys, subscribe our channel. It is very important to us, and like our Facebook page, Accounting Hub by Dr. Scarpin. And if you haven't heard anything about journal entries, about debits and credit, I strongly suggest you to watch earlier our two videos, one about accounting equation, the second one about T accounts. They both are in our video description. Okay, so let's go. A form for recording transactions in chronological order is called a journal, and recording transaction in a journal is called journalizing. So we will put all of our transactions in a document called a journal. And this is our general journal. So what do we have? General journal page, just like any other document, page 1, 2, 3, and 4. Number of rows, very important if you want to find your transaction. So this transaction is on rows 54 and 55. And then date, regular date, January 2nd, April 19th, my birthday, and so on. Account title, what is debits and credits, for instance, cash. Document number, what is the number of your document? What is the number of your source? For instance, check, receipts, invoices, so check 1, check 125, and so on. Post ref is what is the number of this account on your chart of accounts. We will be talking about it later and better when we go to our Excel file. Amount of debit and amount of credit. So what do we expect in a general journal? Accuracy, we need to do it right. Chronological record. In the past, when we did it manually, it was a huge problem, because if we forget anything, we should add it manually, add rows and so on. Now it is based on software, so the software does that for us. So they present it in a chronological order. Double entry accounting. Information for each transaction recorded in a journal is called an entry. So each entry is one transaction, we call it entry. And what is double entry? The recording for a debit and credit part of a transaction is called double entry accounting. Double, debit and credit. Remember, credit where the money comes from, debit where the money goes. So we may have more than one debit and more than one credit. However, the sum of debits must match the sum of credits. And four parts of a journal entry: date, account debit and debit amount, account credit and credit amount, and the source document number. Before the thank you, let's go to our Excel file. And by the way, guys, this file is the same file of our accounting equation and T accounts videos. So if you have watched them, it will be much easier. So, beginning balance, nothing. So we will start our company from scratch. So transaction 1, date, January 2nd. And here, 2021, because we are recording this video on 2021. Account title, what is the first one? The debit. Received cash from owner. So our debit, cash, we are receiving money. Let's consider here, receipt 1 as our document. Post ref, what is the number of cash account in our chart of accounts? Every company must have one. Your instructor probably is providing you one. So for our Scarpin web service, assets, cash, 110. So our code is 110. How much is our debit? $5,000. What is the credit? The credit is here, Jorge Scarpin Capital. Jorge Scarpin Capital. And usually the credit, we go a little bit to our right, around 1 centimeter. So it is some inches. And how do we do that on Excel? We come here. So if they are here, just come here, increase indent. So 1, 2, and we are good. What is the post-ref of her scraping capital? 310. 310. And then it is a credit 5,000. And we do it for all of our transactions. So the second one, also January 2nd. Paid cash for supplies. So we are increasing our assets, supplies. Supplies here, 150. Supplies, and if we are paying, let's consider here check 1. And it is the post-ref 150. How much? And guys, if it is too fast, just watch this video or pause it and go back. That is why I love YouTube. And the credit is cash. We are paying money. So cash 110. You all already have it. And the credit is also 300. Transaction 3, January 3rd. And paid cash for insurance. It is our prepaid insurance. We will use this insurance for a long time. So it is an asset. Prepaid insurance 160. Prepaid insurance 160. Let's consider here also a check. Check 2. Guys, we will not go with this source anymore because it is not random, but we have it for each transaction. But here we don't have a pattern for that, so just check with your instructor when you have this assignment. 200. Credit. Cash. 110. The same 200. Transaction 4, January 5th. And bought supplies on account. So again, supplies on account. Let's consider here the invoice 1. Promise, the last one. 150. How much it is? 250. Our credit, let's check here. Liabilities, accounts payable, Canyon office supplies. We have it on the T account. So let's copy and paste. It will be easier and faster. And accounts payable here, 210. 210. 250. Transaction 5. Paid cash on account to Canyon of supplies. January 9th. We are paying for this account here. Let's accounts payable Canyon of supplies. It is 210. 100. Our credit cash 110. 100. Transaction 6, January 10th. Received cash from sale. So our debit cash. We are receiving cash. How much? 2,000. What is the credit? The credit is sale revenue, increasing our owner's equity for 10. So sales for 10. The same $2,000. Transaction 7, January 12th. Sold service on account to Main Street Service. Accounts receivable, Main Street Service. Why accounts receivable? Because we are not receiving the money yet, but we have the right to collect this money later. Accounts receivable. What is the number? 130. 2. On account 800. And our credit is again sales for 10. 800. Transaction 8. We are almost there. Transaction 8 again January 12th. Paid cash for communication bill for cell phone and internet. Communications expense. The code communications 530. So here communications expense equal 350. Credit, again cash 110, 350. Now number 9. Paid cash for equipment rental on January 13th. Equipment rental expense 540. Oops, 540, no, not 140. 550, credit, cash, 110, 550. Now, received cash, January 16th. If we received cash, our cash will be our debit. 300. And credit will be the accounts receivable here, because we are receiving it, so we are decreasing our accounts receivable. And this account receivable 130, credit 300. Finally, January 16th again. George Scarpin withdrew equity. I'm withdrawing my equity. So here, owner's equity, Jorge Scarpin drawing. Not capital, drawing. Number 320. How much? 1,000. And credit cash 110, 1,000. And then we go back here, we move on here, empty rows until row 40 and so on. Nice way to double check if our numbers are right. So checking. We sum our debits and credits. Remember, double entry, the sum of debits must match the sum of credits. So here equals sum all of our debits to 1. 10,850, sum of our credits 10,860. So apparently we are good here. So no major problems here, so no two debits or two credits or wrong numbers in debits and credits. Okay guys, I know it's not that easy, so check our previous videos, check this video how many times you want. Thank you so much. Questions or comments, leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.